Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. It is a good day. It's Friday. It's nice and early in the morning. This is the first episode we're recording, 7 a.m. here in Tacoma. So hope you guys are having a good day wherever you are and whatever day it is for you. We got Daniel Angel with us on the podcast today from Apex Investment Groups. They do single family and multifamily new construction. So for all you guys out there who are interested in that ground up development, you want something new, you want something fancy, this is the episode to listen to. I'm excited to jump into it. Daniel, thanks for hopping on.
Sure, Gabe. Thank you so much for having me. Pleasure to be here.
Absolutely. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. So why don't you take us back to the beginning of your story in real estate and just tell us how you got here?
Yeah, absolutely. And thanks for letting me share a little bit about that background. I'll really back, to earlier. I'm originally from Colombia. So part of my first steps in real estate in the U.S. had to do also with the transition from Colombia to the States. Born and raised there. After I finished high school, I had the chance and the opportunity to go to school here, actually in Atlanta. And then I went back to Colombia. Once I finished my degree, I started my career in the banking world. So it was more like finance driven in the corporate world, a little bit of corporate banking, investment banking. And then I got into real estate there, where I had the opportunity to work for a development company in Colombia. And that's where the real estate vibe started kicking and some of those juices flowing. Although it was always from that institutional kind of like developer kind of approach and from the corporate world. Had a chance to do that for a couple of companies there. And then a few coincidences happened, and then I ended up working for a cement and ready mix company here in Atlanta also. That was like pure coincidence. So back in the States, corporate world from a different angle, more like from the production side. And I was part of the finance team, corporate finance, kind of like M&A team. Which it was a great opportunity to get back to the States, but kind of like from a different angle. I really missed the real estate portion of things in my life, and tried to do a couple of things within that company since they had some land that they had acquired, and obviously they were more focused on their core business, so that didn't really flow. So at some point I was like, hey, if I don't take the leap on myself, I'll never do it and nobody will. So I decided to do, a couple of investments on the side, put together a few kind of like underwriting models, understanding how the process and the, I guess like the business went here. The residential space had been like the only class that I hadn't dealt with before, because I was more like on the industrial and hospitality world when I worked for real estate companies in Colombia. So a little bit of like step by step, just got my feet wet with a couple of flips actually here in Atlanta, and that's how it all started. I'm talking back in late 2015, early 2016 is when I did those first couple of flips. We were in a different market, clearly, different part, moment of the cycle.
That was a good time to get into it. It's 2015. It was just going up at that point.
Absolutely, and it was a great opportunities in terms of like inventory. It was the tail of that, GFC kind of like residue in terms of like inventory and what was going on. But still, there were like great opportunities of buying distress, and like the typical textbook, I guess, approach worked. When whatever you can hear on from anybody else that has done it, like everything that used to work back then that doesn't quite right now worked, and that was like the first stepping stone, like for our platform. Later that year, I met who is my business partner now. He was living in Miami, doing something similar, but not quite vibing with Miami. So he visited Atlanta, liked it, and he liked the opportunities that we were having here, and decided to join forces in 2017, and that's where Apex really came alive after a few cycle of flips. Continued doing or staying in the flipping business for a while, and then we put together a few rental portfolios, and always in the single family space up to that point. That's basically the in a nutshell the story.
Nice, man. I love it. So we don't often hear people coming from the corporate side of real estate and then getting into real estate. Usually, people are just kind of hack and slashing it out there doing single family rentals and stuff. So it's really interesting that you came from the corporate side of real estate and you started your own company, especially because your initial experience was in a different country. You're in Colombia, you were doing real estate in Colombia, and then you transitioned over to the United States. I'm always, I don't want to make this the point of the podcast, but I'm always interested when people do have that type of experience. How does it differ? How does doing real estate in Colombia differ from doing it in the United States?
Yeah, totally. It's very different. I mean, I would say like the main drivers are the same, and I guess like the lingo, so to speak, is the same thing.
Yeah.
What makes it different, other than the construction side of things, more talking like real estate, is the fact that like the macroeconomics really work here and not so much there. So everything that happens in the world like has like a direct impact here, like pretty much immediate. Rates go up, market moves. Rates go down, market moves. X thing happens, market moves. So it's a lot more dynamic. Now, on the other hand, you have a lot more tools, I think, here in the U.S. In terms of like financing. So you have private lending, you have other types of companies playing in the stack, so to speak. So there's pref, there's mezz, there's senior debt, there's equity, all sorts of equity. So there's more players and I think more tools in your bag to make things happen, but there's a lot more dynamic in the market. I would say in Colombia, you have less tools. It's like one or two types of loans. There's pretty much like equity, and that's it. And it's, I would say it's like you're 30 years behind in that regard, in the way you put deals together, in the way it's obviously catching up, but there's less players, which makes it, I think, harder to put things together. It's a little bit more reserved for like the seasoned, like really seasoned companies, whether it's from the development side or from the institutional side on the loan or equity side of things. So yeah, there's definitely differences in the two scenarios.
Yeah. No, that's always interesting for me to hear. We have people that are from London, from Colombia, from different countries, and it's always interesting to kind of hear the different nuances between how people operate in different countries in real estate. So, but getting back to your story, so you guys, you got into Atlanta, you found your business partner, and you guys started doing flips, and then eventually you transitioned to ground up. At what point did you make that transition, and why did you decide to shift your attention from your traditional fix and flip to ground up development?
Right. So there's an additional transition there. So from single family and like the flips and rentals, we transitioned over to multifamily also. And in multifamily, it has been more like acquisitions, value add approach. So we developed like what we believe it's like pretty robust and strong renovation and construction side. We're almost vertically integrated, but the construction side is part of our team. So with
Okay.
that, we transitioned into multifamily and kind of like looking for that edge into the value add space. Now, the economics have changed after, the 2021 and 2022 when rates kind of
Oversupply.
like went wild and everything.
Yeah.
Exactly. So cap rates compression and then expansion and whatnot, that dislocation between sellers and buyers. So it just took us pretty much like back to like, rethinking or thinking deeper in how to keep transactionality going. And, looking back into single family, which we never left from single family. It was more like having like the two lanes open, so to speak. Now, finding that specifically because prices have gone so much up, we started to find more margin and a better yield on buying lots and developing those, whether it was for rental or for sale. And it seems to be like an easier, I mean, not to say it's easy, but it's like a more straightforward process. So our team is already capable of building. We have developed, enough, and I guess built enough, more than developed, built enough. And we've found a good way to keep surprises out of the equation with the ground up. I mean, obviously there's more risk because you're, transitioning from land to something built, but at least there's no surprises once you start knocking things out. It's
Yeah.
in essence one of the main reasons why we decided to get into new construction.
Yeah, and I hear that from a lot of developers, builders, who have done flips as well. Is that I've never done development. We do commercial. We buy mobile home parks, RV parks, self storage facilities, and development always is interesting. But just you hear those long timelines and all the red tape that you have to go through. But just what you said, I mean, that is why people are attracted to it, is because it is predictable. Insofar as you can really plan around it. With a flip, you put a hammer into a wall and all of a sudden you realize like you need to replace all the plumbing. There's dry rot, whatever. There's all these different things that kind of come out. And so it's difficult to plan it, to know exactly what needs to happen. But as I've heard with development, it's a lot more, what has to happen and you can plan it down to a timeline. And that's been your experience as well.
Correct. Yeah, absolutely. And I think what has been challenging in the past, I would say a year or year and a half or so, well, maybe longer for those who tried to do or put together deals, in late 22 and up to, I guess, today, is as long as you're not relying on debt for those early stages and you have like a heavier, I guess, like equity slice, and willing to give up some of that yield or some of that return just to keep it like safer, I think that's fine. Obviously, it limits your capability of having like a broad pipeline or broad backlog if you have limited resources and limited capital. But it's just a matter of making sure you're not burning cash on, while you're dealing with the red tape that you were mentioning, right? Because definitely, I mean, and the world has changed with that. I don't know what happened necessarily, or if it's coincidence or what it is, but post-COVID, municipalities just tend to be slower in general, or at least it has been our experience in terms of permits, entitlement, and all the processes you have to have in the first part of your development. So if, as long as you're not, as long as you have patient capital and you're not depending or relying on debt for those early stages, once you got your permit, at least you know what's going to happen. You just have to build, and that's pretty straightforward once you have it down to the team.
Yeah, that makes sense. So how do you guys decide the type of product that you're putting in? So let's just say you find obviously it'll depend on the zoning and what you can actually put there, but let's just talk about residential for now. How do you decide what you're going to be putting into the space in terms of like the bed bath combination, the the fixtures and the quality of the actual the house itself. Take us through the process that you walk through to decide what you're going to be bringing to market.
Yeah, no, that's a great question. So we have two strategies. So once we find an opportunity, we decide whether it's going to be like we call it internally, like for sale product or a for rent product, and that comes from.
So you do build to rent as well. Got it.
We do build to rent also. Correct.
Got it. Okay. Sorry.
So within the build to sell, it'll come from whatever comps we find, depending on the market, the submarket. If it's a community or if it's just a standalone lot, depending on what are the type of families, demographics, and whatnot, and then we decide the room bath combination and the size of of the product. Depending on that price point that we determine, from that we will know if it's going to be, and we basically range from like 4 packages. If it's like builder's grade up to what we call like higher end, but it's never like luxury. We don't get past like a $900,000 home. So we range between mid 500s or let's say low 500s up to 900,000, depending on where we are and the size of the home. Range between 2,000 square feet to 3,500 square feet. Anywhere from 3 bedrooms up to 5 bedrooms. Basically.
Yeah, and you said you basically have 4 buying guide packages. I'm sure you have a predefined set of things that you're buying for each of those package, and so you're not going in there and deciding each fixture. What type of fridge is going in here, what type of sink is going to go here. You know what you're going to buy based on the price point of the house that you're going to be putting in.
Correct. So think about it like a little bit of a matrix. So we have like level 1 to 4, from 1 to 4, and that will determine like the type of material. So it comes from like flooring fixtures, both electrical and plumbing fixtures, and like appliances, let's say, right? And then we have like different variances like A, B, and C for each level, because we don't want it to be exactly the same. So, maybe the backsplash changes a little bit, the color of the tile changes a little bit between like, 3, A, B, or C, So depending on what price point, we go from level 1 to 4. And then if we have multiple homes in the same area, we kind of like combine, do a little bit of combination. So we don't have just
so the neighbor doesn't walk over and be like, you have the exact same house as me.
Exactly.
That's funny.
Right.
Nice, man. Well, hey, I just took a peek at the clock. We are running it down. Before we move into the quick question round, though, I always like to ask, what do you see for the future, for your own future, for your business? What's your guys' goals, and what are you trying to achieve?
Yeah, no, of course, and thanks for that. For us, like the main thing is consolidating a diversified portfolio between that BTR and BTS kind of like strategies. Adding multifamily again once numbers start making sense, and it's just cruising through that. We're starting to offer construction services for third parties also, and just consolidating a solid team. I forgot to mention part of our team sits in Colombia also, so kind of like keeping some of our roots as part of our culture and strategy. That's what we're seeing moving forward.
Nice, man. I love it. All right, let's hop into the quick question round. You ready?
Go for it.
Starts with education. It could be any form. It could be a conference you've gone to, a movie you've seen, a mentorship program you've been a part of, book you read, any form of education. I just need 2 recommendations, one for general life wisdom and then one for real estate. Hey guys, quick break from the show. If you've listened to this podcast before, you know we are always talking about how important it is to have the right mentors and partners in real estate, which is exactly why I've opened up the Real Estate Investing Club online community. It's a place for active investors to learn, collaborate, and get real deals done together. And right now, it is 100% free to join. We host weekly calls where we review deals, talk strategy, and share tactics. Just click the link in the description below and come join us.
Perfect. For real estate, geez, I mean, I would say just going for it,
Yeah.
just testing the waters. I think my most everything I've learned, it has been doing in the
Mm,
real estate world. And then for the general one, I would say the most recent that we've used is a book called Traction, the
yep.
EOS method. I don't know if you're familiar with it.
Hmm.
It's something that's helped us as a company and as a team kind of like put things together and get aligned, uh, even if it's just for general purposes in life. I mean, it's geared towards companies, but I think it's been like a great tool in general.
Yeah, Traction is a good book, and I love that you said for your education for real estate is just do it. So many times it can be easy to get stuck into that kind of, especially when you haven't done real estate, you haven't done your first deal. You can get stuck into that analysis paralysis kind of thing where you're looking at
100%.
properties and you're not doing anything. And so whenever any guest says something along those lines, I always point it back to you, the listener. If you have not done your first deal, just go out there and get it done. Just go. It doesn't matter what it is. It could be just a small little flip. It could be a wholesale, anything. Just get your first deal done. 10 years down the line, you will be happy that you have started today. So go out there, get it done. And that leads us to the next question. This is for your younger self. Let's go back to the Daniel who was still working in Colombia at that construction company. Go back to him, look him in the eye, give him one piece of advice moving forward.
It's gonna sound repetitive, but honestly, this is kind of like one of my things in life. It's just like start now. That's what I would say. Just go for
Yeah.
it.
Yeah.
Take the
No,
leap.
that's good advice. Fear is what holds so many of us back. And if you don't just get started and just get yourself over that hump, it just never, you never get the feedback that you need in order to start making the correct decisions, the correct adjustments. So yeah, that is
And you know
great.
what? I would add something. Sorry, one thing, and sometimes I repeat it. It's like stop reading and start doing. Sometimes you try to find the additional thing that's missing, and it's going to be this book, it's going to be this course, it's going to be this website, it's going to be this. I mean, it gets to a point where it's like you've read enough, you just have to go out there and do it.
Yeah.
That's my mantra, to be honest.
Yeah, no, I 100% agree. All you need is just a general understanding of what you're doing, and then everything else the gaps will be filled in as you take action. Action is what's going to actually inform your understanding. So great advice. Moving us on, this is for the U.S. It's a big place. There's a lot about opportunity out there. Give me the single metro you're most excited about investing in today.
Well, it's the only metro where we are, but North Atlanta for us it has been where we need to be. We keep seeing the expansion.
Is there any like submarket within Atlanta that like a small city out
So
in a
the North
tertiary?
Corridor, like Georgia 400 North, and the Alpharetta, Cumming, even Delano. I mean, it's just like it keeps growing and it keeps going. It seems tertiary, and I have this conversation with so many like institutional or like more sophisticated investors that are like, "Dude, that's so far away from Atlanta. Like, what are you doing?" It's you need to massage it a little bit, but it's there and it's there
Yeah.
to stay.
No, yeah. I mean, invest in the path of development. That is a great strategy. So makes sense to me. Moving us on, this is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what is your favorite way to generate leads and find new deals?
We keep testing and trying, like online, social media and marketing, digital. I mean, we test it all, we try it all. We have a lot of those going on, but it seems to be it all comes down to relationships. So it's networking. To be honest,
Yeah.
like get out there and talk to people that are involved or that know other people, and just broaden your network. That's the key.
Yeah, networking is key. I always say, especially for real estate, but that's not, every business networking is very important. But I do feel like, especially for real estate, it's just the more, friends you have in real estate, the more you learn, the more deals just start coming your way. And so, and that's always why I like to say, if you guys are at all interested in starting a podcast, it's a great way to network. It's a great way to meet people like Daniel. And it's a lot easier than you think. So get out there and start networking. All right, next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something goes wrong, and that's when we get to learn a lesson. So what was a deal that went a little bit sideways for you, and then what was the lesson you pulled from it?
Yeah, I think one that went sideways for a minute was our first multifamily deal. We went in a little bit too hard on renovating almost all units at the same time, so our occupancy drifted a little bit deeper than what we anticipated. And cash flow is king, so that got us in a little bit of a pickle for a minute. Obviously, once things were renovated and whatnot, I mean, we got new tenants in and stabilized cash flow, and it made sense. But maybe my comment there would be a little bit cautious with getting ahead of yourself and just follow your plan.
I like it. All right. And on the flip side of that, sometimes deals, everything just aligns and everything goes right and you kind of walk off into the sunset. So give me your highlight reel. What was the deal that everything just kind of seemed to work out? What was your favorite deal? And tell us a little bit about it.
Yeah, definitely. We had a rental portfolio that we built between 2018 and 2019, stabilized along those. In that time, and the idea was put it together, stabilize, and sell. The original plan was that was single family, so it was trying to find either an institutional, a little bit more sophisticated buyer to buy the whole deal. And it was like perfect timing, early 2021, when rates were like so down, and it just made sense to sell it like one off to homeowners, really. So we rolled up our sleeves and started selling 50 homes one by one, switching some actually applying some capex in them so that it would be more like appealing for homeowners, and it ended up being like a grand slam. We didn't really intend to do it that way, but it was like the perfect timing. Something that, if we would have planned it that way, we would have missed it for sure. But it just happened, so it was a great experience.
Hey, when luck comes your way, you take it. Absolutely. 50 homes though, man, that would be quite a process to get through all those sales. So good on you guys. That leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Perfect. Thanks, Gabe. I think the best way is LinkedIn. Daniel Angel Mejia or Angel Mejia on LinkedIn, or on our website, apexinvestments.us. And then, I like to share and to learn. So what they can expect is an open, candid conversation, whatever I can help. If it's somebody trying to take that first step, or if it's someone needing some piece of advice, or somebody wanting to teach me something, always open. So feel free to reach out, definitely.
Perfect. I'll put that link in the show notes. So if y'all want to reach out to Daniel, all you got to do is click that little more in the description. It'll pull down that full description, and in there you can find his link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Absolutely. Thank you so much, Gabe, for having me. Pleasure to be here.
Absolutely. For everybody who's with us, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can.
Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.